Are you struggling to pay your tax debt to the IRS? An offer in compromise might be right for you. Offer in compromise? What is that? This might be your situation. You owe the IRS a lot of money and you don't have any means to pay them back anytime soon. And a payment plan just won't do it. An OIC, also known as an offer in compromise, allows you to submit an offer to the IRS as a negotiation for settling your debt for a lower amount. However, not everybody qualifies for an offer in compromise. To qualify for an OIC, you must have the following. Number one, you must be up to date on all of your tax return filings. This is the paperwork. You must have submitted all of the outstanding tax returns. Number two, you must be current on the current year's estimated taxes. You can't try to negotiate old taxes if you haven't yet started on a path of making estimated taxes for the current year. And if you're a business owner asking for an OIC, you must be up to date with all of your payroll taxes. This is the wages, the taxes that you withhold from the wages of your employees and the employer taxes. You cannot be past due on any employer taxes. But even if you meet these qualifications, the IRS can still reject your offer, your negotiation, if you don't meet at least the reasonable collection potential. The reasonable collection potential, RCP, includes the value of all the assets, so your vehicle, if you own a home, your bank accounts, and it also factors what you make now and could make in the future minus basic living expenses. The IRS might accept your OIC based on three main reasons. The first is the doubt of the liability existing to begin with. Do you actually owe this amount of money? Two is doubt related to collectability. Can they actually collect it from you based on your assets and current income and future income? And the last is effective tax administration. So even if it is correctly owed and even if it is collectible, is it going to create some sort of undue hardship or is there some sort of extenuating circumstance? If you're considering an OIC, there are some important things to consider. Number one, you have to make sure you keep filing your tax returns on time. And number two, you have to make sure you keep paying your current taxes on time. It's also important to remember that businesses and individuals going through bankruptcy actually cannot qualify for an OIC. During this OIC process, because it's so important for the IRS to determine your payment viability, you have to reveal all documentation surrounding your assets and liabilities. Even if the IRS rejects your offer, you do have an opportunity to appeal it within 30 days. We hope you enjoyed this latest installment of What Is That? Hit the like button, subscribe to our YouTube channel, and follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.